Hello and welcome to Steelonthenet.com on YouTube. The discussion topic today is investment in African steel. If you are interested in investing in steelmaking anywhere on the African continent, then this video clip is for you. I should add that our consultants have quite a lot of experience in assisting in this area. In recent years we've worked on 2 different feasibility studies in Nigeria. Both projects got the go-ahead and the relevant steel plants are now up and running. We've also worked on the east coast of Africa in Kenya and on the west coast in Ghana, Benin and Senegal, as well as further south, down in Angola, where we also looked at another feasibility study for a steel plant investment near Luanda. All of these studies involved supply side assessments, demand assessments as well as economic appraisals, and it's on this basis that I feel qualified to speak about the subject today. So let's turn to the main issues. I will start with demand. I will then discuss supply issues, and finally I'll say a little bit about the economics of steelmaking in Africa, which is perhaps the most interesting part of the presentation today. Let's start then with the demand issues. Investors very often think about steel markets in terms of demand intensity. By demand intensity I refer to demand for steel expressed on a per capita basis. This is an important measure of demand because demand intensity usually increases as an economy matures. In many parts of Africa, steel demand is very low when expressed on this basis, and in countries such as Kenya, for example, steel demand today is only about 30 to 40 kilograms per capita. In the EU, it's around 280 kilograms per capita, which is 7 or more times greater than in Africa. If you recognise both the fast-growing population size and the probability of fast-growing steel demand intensity in many parts of the African continent, this predicts steel markets that are likely to grow strongly. And that growth is likely to happen at a time when steel markets in places like Europe or the USA are actually likely to decline or stagnate. Obviously, you need to do your homework and check the particular market characteristics for every particular opportunity. But adding to the generally good demand growth prospects, you quite often see significant import penetration in many African steel markets in products such as hot rolled coil, rebar or tube. These assessments often illustrate the presence of a significant investment opportunity, one that's generally much harder to find in more mature markets such as European steel. So, if demand can often look attractive, how about the supply side? Will it shock you to hear that in regions such as Central, Eastern or West Africa, where there are populations of hundreds of millions of people, there is not a single 1 million tonne or greater steel plant? Well, it's true. West Africa alone, excluding Algeria, has about 330 million people, and with conservative assumptions about steel demand growth, can be expected to increase its steel consumption by 8 or 9 million tonnes in the next 10 years. So an important question is, who is going to supply that steel? Another way of looking at African steel supply is to look at the existing capability. Here I'm really talking about the product mix. In most of the countries in this region, if you look at capacity, you'll see that there is a lot of production potential for rebar, that's hot or cold drawn. There's a bit of capacity for galvanized steel, which is mostly used for steel roofs, and some capacity for tube. More often than not, in many of the countries on the continent, there is no local capacity at all for making hot rolled coil, or for production of heavy sections. It's also quite rare to see cold rolled coil capacity. Both the mix of production capacity and the level of steel production capacity thus point to an investment opportunity. Okay, we've talked about demand and we've talked about supply. Let's now move to the matter of steelmaking economics. I'll start with the subject of steel prices, and here some of the economic groupings of African states are important. In West Africa, the main such grouping is ECOWAS, which stands for the Economic Community of West African States. To the east and in the south, a similar grouping is COMESA, which stands for the Common Market for Eastern and Southern Africa. Both economic groupings are important because by agreement with the WTO, they impose an import tariff on certain steel products. If we take the COMESA region, for example, the import tariff on rebar or on cold rolled coil today is 10% of the selling price. On hot dip galv or organic coated sheet, that tariff is 25%. These tariffs allow local producers to charge substantially higher prices than would otherwise be the case on many steel products. Locally produced steel is normally therefore sold at much higher prices in Africa than elsewhere in the world. Production costs are also very advantageous in Africa. Again, because of government intervention, many countries in Africa have export bans in place. These bans are put into place to protect local steelmakers on materials such as scrap by ensuring availability of raw materials. They also have the effect of making raw material prices artificially low. In some countries, scrap can, as a result, be 50% or less than the internationally traded price. Energy costs are also an area of cost advantage. Natural gas with a world price of about $17 per gigajoule can usually be purchased for about $4 a gigajoule in Nigeria. And I note that much offshore oil and gas exploration is currently underway on the East African coast. In many parts of Africa, labour costs are moreover about 10% or less than in Europe. CO2 related emission costs do not apply in Africa as they do in Europe, where cost penalties relating to phase 3 of the emissions trading scheme kick in the European Union. To summarise then, steelmaking in Africa offers many advantages that are not found elsewhere in the world. These advantages include steel markets with very strong growth prospects, with underdeveloped steel supply, meaning an opportunity to get first mover advantage, and an extremely attractive combination of steelmaking economics that is often supported by high selling prices for steel, as well as low raw material, low energy and low labour costs. That concludes the presentation. I hope the presentation was interesting. If you are looking for assistance with a steel industry investment in Africa, why not contact us at Steelonthenet.com. You can also email us at info@Steelonthenet.com or call us on +44 775 149 0885. My name is Andrzej Kotas. I am the CEO of Steelonthenet.com. Thank you very much for listening.